Good morning, everyone. This is Financial Literacy 101. And today we're going to do a stock talk. Okay, we're just going to go over a couple of stocks. One that was in my portfolio that I actually got rid of just in time as the Wall Street Best Group was controlling the stock. They were short squeezing the stock. I did a review on this stock as well as a short squeeze, kind of talk about it and how you should ride the wave and get in and get out. And this stock absolutely is down $5, $6, $7, $8. So a lot of people have lost 50% of their profit, which is in some cases astronomical. But we're going to look at this stock and see why I got out in the time that I did and made the profits that I did as well. As I'm looking at this particular stock, and we can look at it together, as you can tell here on April 26th, I bought 11 shares at $21 per share, around $250. Then I went in again on April 26th and I invested another $259, okay, at 11.2 shares, and that average was at $22.93. Then I sell all of my shares on April 28th, and I sold them at $22.86. Okay. Now, when you do the average, I did make a profit. Okay, I did make a profit. Let's see here, regulatory fee. Okay, 1 cent. But nonetheless, when you do the average, I really want to say the average between $21.95 and $22.93. It's about 50 cents. So I probably made only like 50 cents on 50 cents on a dollar. And I had to get out this stock very, very quickly. Very, very quickly, because this stock is too darn volatile right now. Okay. Again, you have to take this with a grain of salt, ladies and gentlemen, is that when the Wall Street Best Groups had their eye on a stock and they are buying large amounts of this particular stock, and then the price shoots up, if you don't get in while they're buying these hundreds and thousands of shares, if you don't get in on the low point and you see it peak, if you go in and buy high, you're going to lose. Now, there's no tool that you can use to say, hey, well, last time when they was controlling GameStop, last time when they was controlling AMC, that they exploded the stock up to 100% of the actual rate that it was before, okay, at the regular strike price. So when you start seeing these stocks tick up like I did, I just dropped $500 inside of it. Maybe let's see here, yeah, $518, $510. Now I want you to look at something again, okay? I want you to look at something again. So as we look here, you got 250 plus 259, okay? So that's $509. When you look at how much I made when I sold it, it's $518.73. Ladies and gentlemen, I only made $9 off that investment. Now, I sold the shares when the shares are at $22.86. Why is that important? Because when I look at the stock today, because Wall Street Bets literally dumped all of their shares. Okay, you see here, 12 hours ago, it says here that Microvision stock plummets 21% on Q1 earnings miss. What you need to know. We already know what happened, okay? I go up here. This is where the stock is today. This is where the stock is today. This stock almost dropped $10 in a matter of days. $10. And that, again, ladies and gentlemen, that is because the Wall Street Best Groups dumped this stock. And I'm glad I got out when I did. I was just waiting for it to tick back up, because the trend is what they do is they'll pump up the stock, meaning they'll buy a lot of shares, and you see the value of this particular stock go up. Then after that, what occurs is you'll start seeing a downtick in this particular stock. So with this particular downtick, based upon their previous history, that stock is going to go up either one or two more times. It's kind of like either twice that you'll see the stock shoot up and then drop down, and then shoot up again, and then it won't return, kind of like GameStop, okay? GameStop, they play with a little bit more, but I'm just talking about their regular trends of all the other stocks like Nokia and BlackBerry. It shot up any 2 to 3 times, but after that, they left it alone. Okay, they made their millions, they got out of it. So that's why I'm kind of advising people, like, if you don't have the time to look at your portfolio each and every day, hour on hour, then the stocks that the Wall Street best groups are in, don't get yourself involved. But if you have time, you're looking at your phone, you have your tablet at work, or you work from home, and you can keep a screen up and you can watch these investments, then it could be profitable, but it's very, very risky, okay? So I'm going to leave that alone. Now, as I'm looking at this, we're going to go over some other stocks, okay? We're going to go over some other stocks. We're going to do a good stock talk. I'm just going to, some ones I think that you may want to be part of your portfolio. You probably don't. It just depends. It just depends, okay? So let's look at this. All right. So on Robinhood, here are the most popular stocks, okay? The top 100 stocks, of course. I have shares in Tesla, Apple, NIO. They even have GE in here. Let's look at GE. GE is only $13.11 a share. I mean, this is a very low-end stock, but GE has a lot of potential. If you look on my channel, I have a GE stock review, okay? So let's look over this the past year. GE has been up almost 100%, if not, okay? I don't know if you guys can see that number, but that's 99.85% of return. Rounded up, it's 100% of return. For every dollar you invest, you get $1, which is absolutely wonderful, okay? 3 months, 20.72%, so 21%. Last month, 0.5%. This week has been down 3%, and today, unfortunately, it is down. Okay, but long-term potential for GE. I mean, again, the name of the company is General Electric, but let me just go over what they actually do at GE. A lot of people think it's an electric company. I mean, before I did all my research on GE, I had no idea all the things that GE was absolutely in. So it says here that GE engages in the provision of technology and financial services. It operates through the following segments: power, renewable energy, aviation. Okay, aviation, they make turbine jet engines for Boeing and other large groups who make planes. Okay, healthcare. Okay, they have a lot of healthcare apparatuses and devices. Would it be imaging and all other sorts of machines for healthcare? And capital. The power segment offers technology, solutions, and services related to energy production, which includes gas and steam turbines, generators, and power generation services. The renewable energy segment provides with wind turbine platforms, hardware, and software. Offshore wind turbines, solutions, products, and service to hydropower industry. Okay, so they're in all these different forms of energy, renewable energy. So they're moving right into the future, green energy, which they should be. So again, this is a really good solid stock for you to invest in long term. Offshore wind turbines, products and services to hydropower industries, blades of onshore, yada, yada, yada. Then it says the aviation segment provides jet engines. Okay. Healthcare segment provides healthcare technology and medical imaging, digital solutions, patient monitoring, and diagnostic, drug discovery, biopharmaceutical manufacturing, technology, and performance enhancement solutions. So GE is all over the place. And how old is GE? 1878 is when GE was founded. Very, very old but solid company that you could see potential profits anywhere from 1 to 5 years, like some really good profits. I mean, you'll see profits primarily in this year, but it won't be nothing to really lick your lips at, okay? No pun intended. Dividends here is only 0.30%, so you're talking about pennies on the dollar. Says GE Verizon is up on 5G. Again, GE is heavily in technology. When people think about GE, they do not think about technology. When you're talking about GE, you should be looking at technology, healthcare, green energy, as well as aviation. You should be looking at all those things, okay? Look right here, the analysts on Robinhood. 20 analysts are saying buy at 60, hold at 40. None of them are saying sell. So again, long-term solid stock. And you can see my history here of me buying different contracts. Made a couple of dollars there, but let's move more. Let's go back to the 100 most popular stocks on Robinhood. Let's pick out another one. Let's see what's another one that can be profitable. All right. We talked about Vanguard before. There's AMC. I wouldn't touch it. Sundown Growers. Nope. Ford. The history of Ford has been very, very volatile. Ford is trying to get it together. They're trying to move into the electric vehicle market. And quite frankly, I know a buddy who has a couple of hundred shares of Ford, and he's been holding on to it for years, and it really hasn't. Well, when he first bought the stock, considering today, the appreciation in assets of the value of that stock went up. But do I see Ford hitting $15? I'm gonna be real with you. Based upon their market capitalization, their revenue, their earnings, I don't see Ford getting to $15 until like the next 2 or 3 years if possible, unless they just do something like very innovative that gets stock investors, very excited about their stock. Okay, so that's the thing. Investors have to be excited about a stock that they're investing in. Oh, Ford is coming out with electrical, mobile, portable charging for their cars. I don't know. I'm just making up stuff, but you get the point I'm getting at. All right. Disney, as people are getting vaccinated, people are going out and about. I know for a moment there, Disney was cutting their prices, but I heard that their prices are coming back, that Disney is no longer cheap. Well, Disney was never cheap, but it was, less than it was before. But anyway, moving right along, let's see, Microsoft, solid company. I think over time you'll make your money. You'll make maybe 3 or 4 or 5, anywhere from, if I had to do a ratio or range, it would be anywhere from 5 to 15% in the next 3 years. Amazon, we know that's going to eventually hit $4,000. And again, don't let that $3,549 scare you away, because at the end of the day, Amazon is a solid stock. And listen to this. This is the news about Amazon. Probably be on the headline news, but Amazon triple their growth from this time last year. In the first 3 months, Amazon has made $8 billion. And I know a lot of you are like, wow, $3,500 per share. But listen, this is Robinhood. You got WeBull. You guys can invest in fractional shares. You don't have to invest in this whole share. That means you have $5, $10, $15 you can invest, okay? The analysts on Robinhood say 96% buy, but we're not going to get into that, okay? We're going to look at a quick timeline. This is Amazon. Okay, over the course of time, the past year has been up 46.63%. Okay, so let's see here. Back in September, they were 35.31 and they 35.41. It really hasn't done that much. And when it comes to employees, ladies and gentlemen, Amazon employs 1.3 million people. I'm rounding up 1.298, but 1.3 million people. Again, I have some history with Amazon. Not a bad company. You're going to work hard. Okay, you're going to work hard, but they're going to take care of you. You're going to get paid your just due. But some people will disagree with that. If they was a tier 1 or tier 3 worker, I totally understand. They work very, very hard. Let's see here. They're not showing me the headline news. If you notice, out of 50 analysts, 96% of them are saying buy, 4% are saying hold, 0 are saying sell. Okay. Look at their quarterly earnings. You see the mountain going up. They're always a solid company. Everybody does business with Amazon. And as you can tell here, ladies and gentlemen, I have fractions of a share. And if you do, when I sold and bought and sold and did this, that, and the other, I really didn't make that much money because I wanted to put my money somewhere else. Okay. Down here, we understand that Alphabet is just simply Google. We're going to that one as well. That's part of the 100 most popular list. And we'll do a timeline as well. This is Google, another very solid company. In my opinion, Google is more solid than Amazon. Even though we heavily depend on Amazon for our shipments, but they have software. And just for you guys to know, Amazon is a technology company first. Jeff Bezos said this back in the 80s, early 90s. He said, when they say, hey, are you an online book company? He said, no, we're a technology company that actually sell books online. So that tells you he already knew the pathway of his company a long time before. Okay, but anyway, the past year they've been up. This is Google we're talking about, aka Alphabet, but it is Google. That's just their parent company, their holding company essentially. They've been up 78%, and then the past 3 months, 10%. The past month, 15%. The past week, 2.5. So we get it. Now, Google only has 135,000 employees, and they were founded only 6 years ago. So again, but this is Alphabet. We can go into the actual Google stock, okay? Because listen, when you look at the ticker for this particular stock, I don't know if you guys can see this. You can't look up just Alphabet. You actually have to type in GOOGL or GOOG. Okay? See how it says Alphabet, but this is Google. They didn't change the ticker or the symbol. They just changed the parent company's name. There's nothing special here. Let's look at this. Here's what the tech giants have proved. They're cynics. What should investors do now? Amazon continues to outpace Google, Facebook, ad revenue. What you need to know. I told you, Amazon, very solid company, but Google is too. Google's been doing very, very good. Waymo looks better. Waymo looks beyond parent Google for funding. And here's, look at this, 95.7, so 96 as well percent. So Amazon and Google, they're on the same wave path as far as what the analysts are saying, but to me, this speaks volumes because you got 46 and I think Amazon had 50. So around the same number. Again, you have the mountain that's going up when it comes to their earnings. And again, Amazon is in the space, Microsoft, Facebook, and Netflix. Let's look at one more. Let's look at some stocks that's, let's go under 50 bucks. Let's do this. Let's go back up and let's filter this under 50 bucks. Okay. I'm just going to scroll through this very quickly, so bear with me. Nano Dimensions, I believe long-term this stock will do very well. Okay, I've done a stock review on this one. You can check out my channel for that as well. Chronos Group, that's a marijuana stock. I think that would do well. Aurora Cannabis, another marijuana stock. We talked about BlackBerry. That's one of the stocks that the Wall Street Best Groups had on their list. I wouldn't mess with it. Fuel Energy, that's been up and down. I have some history with that particular stock. Long term, they actually feel a niche position when it comes to this particular power source. And I did a stock review on this one as well as AMC. And I give you my commentary and what I believe, my perspective on it, if you guys should invest in it or not. But that's fine. And that's fine when we can really talk about very quickly here. See, Ocugen, I did that. Workhorse, GE, Afira, Microvision, Tilray. I've done reviews on all of these. Jetblue Airways. You know what? We're going to look at this one very quickly. I like JetBlue. I've been on JetBlue before. I believe that this company, a very, very frugal company that has nice planes that I've never really heard anything bad about. But of course, we understand that the pandemic has mainly affected a lot of these airlines. And if you guys are looking for long-term investments, then a company like JetBlue may pay off in the next 3 to 5 years. And because a lot of these airline stocks, they're just waiting to bounce back. COVID-19 has done a thing or two to them because people are not traveling like they used to. When I go to the airports, you can tell there's a significant amount of people not traveling, okay? People not traveling. People are like, nope, I want to live. I'd rather not chance. And I totally understand that. But I think long term that JetBlue could probably make you some good money. Okay, let's just look at it. Let's just look at it and see, because I believe that, again, 1 to 3 years, depending upon cases of COVID-19, people getting vaccinated. I know India, they just had a surge in their cases. I mean, it's a lot going on, ladies and gentlemen. But nonetheless, I believe that JetBlue could make you some money. So over the past year, JetBlue has been up to 98%. So almost a dollar for dollar investment. Whatever dollar you invested, you get $1 for your return. Past 3 months, 37% return. The past month, they've been down almost 2%. The past week, it says down 1.5. And when you see that is a decrease, let me just explain this to you very quickly. You see how this is, it's been down 1.79%, and then we go to past week. That means that the stock has returned some, okay? As we see here, it dropped down to $19.04, but this is within that month time frame, so it did some bouncing back because it went up to $20.58. So again, it's returning, but slowly, and it's very, very volatile. All of the airlines are right now. And then today, this is again pre-market. The stock is down to 0.80%. Of course, we all know what they're dealing in. It says that Jetblue, it carries more than 30 million customers a year to 86 cities in the U.S., Caribbean, and Latin America with an average of 850 daily flights. It says the firm offers flights and tickets to more than 82 destinations with accommodations such as free TV, free snacks, and most leg room. And see, that's the great thing that essentially that JetBlue was actually good for, that you got leg room and you didn't have to pay for it, and you got free snacks. Because you guys go to Spirit, I mean, we can do a commercial on Spirit very easily. Spirit Airlines, the airline where we charge you for every goddamn thing and we don't care. You know, that's essentially Spirit. That's all I'm saying. That's the plug right there. What else did I have to show you about JetBlue before I get out of here, guys? Let's see. Kramer shares his thoughts on JetBlue, General Electric, and more. I like Kramer. I think Kramer's on CNBC, Mad Money. Very, very entertaining. But he is right about a lot of things he talks about. So I look at him every now and again. This was back 2 hours ago. Kramer shares his thoughts on JetBlue and also General Electric. You can read this story if you have Robinhood and go on JetBlue and read that news story. Right here you got JetBlue, the COO and the future of airlines and demand for air travel. So yeah, right here you see the ratings. Buy 43.8, hold 37.5, sell 18.8. If you were to ask me, what do I think? This is one of those stocks you buy and you absolutely hold, okay? Because JetBlue is the go-between. Even though today I'm going to fly American Airlines, me and my family were going to Tampa to visit a friend. But JetBlue feels that niche between Delta and American Airlines. I mean, you know, Spirit is on the bottom of the spectrum, but I don't like American Airlines. I like Delta a lot more. Delta is not my top airline. My top airline is Air Emirates by far. But when it comes to, if I had to name four, right? Delta, American Airlines, Southwest, and JetBlue. To me, if I had to rank them for my personal experience of riding on their airlines, and yeah, Virgin is in there too, because I like Virgin Airlines, right? But I don't. They only usually fly with West Coast. But anyway, if I had to number these, I would say that I like, out of these four, it would be Delta, JetBlue, American Airlines, and then Southwest. The only reason I don't like Southwest as much as American is because that whole group thing. I don't like that group thing with Southwest, man. Just tell me my darn seat. I don't want to be, oh, you're in Group A and you guys are all in a bunch there just waiting for your group to load. Now, I understand that other airlines have like, hey, Group 5, go up. But no, you go inside the plane and you like fence for yourself, find your seat. No, I want to know where I'm sitting. I don't want to have to pay for Group 1 so I can scramble about and sit where I want to sit. Some people love that because they have to pay for Group 1. No, I want to know what seat I am. But ladies and gentlemen, there you have it. That's your stock talk for today. TGIF, you guys have a great and wonderful weekend. Again, I'll be Florida, so I'll see you when I'm out and about. I might go live just to show you how Florida is looking in the Tampa Bay area. But anyway, that's all I have for you guys today. Learn money and be inspired. I'll talk to you guys on the next one. Peace.